Hi there, I hope you're doing well today. I wanted to share a little bit of insight into mortgage refinancing and home purchases. So I'm getting a lot of questions about, is this a good time to refinance a mortgage? Is this a good time to look at selling your existing home and perhaps buying a different home or buying a second, vacation property or investment property in real estate? So all sorts of questions around real estate financing are popping up. And really that's been the case over the last several months because interest rates have fallen pretty dramatically. If we think back to the beginning of 2020 to where we are today, interest rates are much, much lower. And so that's presented a lot of opportunity for people to be able to experience some cost savings on the debt financing for real estate property. So first off, let's talk about mortgage refinancing. Rates right now are much lower than they were, and depending on when you're watching this video, they could be, moving around a little bit from where they are today. But I would just kind of think about your existing rate for where it is, and I would think about where rates are now. And generally, as a rule of thumb, if we can see somewhere 0.5% to 1% of improvement in your rate, meaning you can reduce your rate by that much, then it's really worth looking at. It's worth doing the math to say, okay, should I actually, in fact, refinance my home? Whenever you're looking at a refinance, generally you're going to have some different choices around the term of that loan. The most common, kind of gold standard, if you will, for mortgages here in the United States is the 30-year fixed rate mortgage. So most people have a 30-year fixed rate mortgage, and when they refinance, a lot of times people just move to a brand new 30-year fixed rate loan. That's not the only option that you can choose, though. Obviously, there are some shorter terms. You can do a 15-year or a 20-year mortgage, and generally your rate is obviously going to be lower. You're going to pay a lower rate for those shorter terms. Generally, you're going to have a higher monthly payment. So as long as that works from a cash flow standpoint, and you're wanting to have that mortgage paid off in a shorter amount of time, sometimes that can make sense. One other type of loan that we've seen make sense for some folks is to actually look at an adjustable rate mortgage. And more often than not, I don't recommend adjustable rate mortgages because we're incorporating, kind of baking in some unknowns about the future, about where rates are going down the road. But on an adjustable rate mortgage, you will usually have a certain number of years, a set number of years where you have your rate locked. And maybe that's a 4, 5, or 6 year time period that the rate is set. And then after that time period, the rate on that mortgage would adjust at a predetermined frequency, maybe quarterly, maybe semi-annually, maybe every year. It can make sense to do an adjustable rate mortgage on a refinance, especially if you think that you may actually be moving relatively soon. Let's say if you're closer to retirement, you want to have some cost savings on your interest expense. You're not sure whether you're going to be in that home more than another 4 or 5 years. You think you'd maybe sell that home and downsize, or sell that home and move elsewhere. Then it can make sense to do an adjustable rate mortgage because the rate on an adjustable rate mortgage is usually going to be lower than what you would get on your more traditional 30-year fixed rate financing. So that's just one more tool in the toolkit to be thinking about. The other thing to be thinking about is this a good time to be looking at acquiring a second home or buying a vacation home? And the answer to that is it kind of depends a little bit. Depends on where you're looking to make that purchase. It depends on how that fits in your overall financial plan. It's a little bit of a kind of getting on one side and giving up on another side right now with the real estate market, because real estate values, especially in more desirable kind of vacation type areas of the country, those real estate values have really gone up a lot. So you may be paying, maybe significantly more for the same property if you bought it today than you would have paid a year ago. That has to certainly factor into the equation. It may be balanced out, though, by those lower borrowing costs, by you being able to go and purchase that home with cheaper financing than what you'd be able to do a year ago. So hopefully that's helpful. Hopefully it gives you just a little bit of things to think about. At the end of the day, I would recommend most people to evaluate whether it would make sense for you to refinance your home if you have existing financing in place. Just make sure that you're paying a market level rate of interest, and then that the refinance really fits in the big picture for you and makes sense in your particular case. Feel free to reach out anytime, and we're glad to help. Thanks. Have a great day.